We made substantial investments in ports. In Iran, we have it. We've got it in other parts. We've got airports. So what are the priorities that you see India is focusing on?
You're spot on, actually, Arjun. So one of the things I think which is less discussed or not completely understood is how internationalized India has become. Like our energy companies alone, have over 30 energy assets around the world. Over time, some of our businesses have also stepped out, take contracts in developing ports. Haifa is an example, Colombo Port in Sri Lanka is an example. Some of our airport companies have actually gone and taken on contracts to develop airports in Indonesia, Philippines. So we are quite internationalized. If you look at the net international investment position, we have about $1 trillion invested abroad.
Clarify this for me. When an international payment has to be routed, suppose India has to pay, let's say it has to pay South Africa, and it's a dollar transaction that we have to pay in. We pay. So it's routed. Is it routed through New York?
It is true. If you're using the dollar, then the U.S. Treasury, if the U.S. Fed Reserve, is the institution through which the transaction will be routed, or they will be in the know, or they will approve it, and it cannot be done without their knowledge. If we look at 2020 onwards to 2024, and if you just look at some of the Asian countries, Indo-Pacific as we call it, the number of technology-related legislations that individual countries have ratified, Japan, Korea, Australia, Taiwan, India, just in this region, and the United States, it's over 100. That's 100 domestic legislations that have been introduced on different aspects of technology, AI regulation, things to do with semiconductor electronics and whatnot.
Is it a counter to China? Because a lot of this technology did not really come into India before. So I was actually talking to this friend of mine who's into textile exports, and he was saying that even he's been surprised about how many different people who were actually dependent on Bangladesh have now switched over and come to India. I was asking him for numbers. He didn't have those, but he says, even if you look at my company, our exports have gone up by 65-70%. So we have a new president of the United States coming. Well, it's his second term in office. He's already threatened trade tariffs. He's threatened India as well. What are the concerns that, India might have about that with Trump coming in? Welcome to Arjun Bhagat Decodes, and today we have Akshay Mathur with us. He's the director of the Asia Society Policy Institute, which is based in New Delhi. Of course, its headquarters is in New York, but it has a global footprint. So welcome to the show, Akshay. Tell us a little bit about the institute that you're working for. What does it do, and what is the role that you play in it?
Thank you, Arjun, and thanks for having me. The Asia Society Policy Institute has been established by Asia Society. We have offices around the world, particularly in Asia, say in Japan, in Korea, in Australia, and of course India, but also some in Europe, Zurich and Paris, and around the United States, in New York, where we have a base. But Washington, D.C., as you can imagine, for a policy institute, very important to have an office in Washington, D.C., but also Houston, Seattle, San Francisco. So it's a truly global think tank. The institute itself, the main mandate is international affairs, but with a special focus on Asia. And that history goes back about 80 years on how the institute itself has tried to gain an understanding of Asia and also try to bring, decode what is happening in Asia, both geopolitical and geoeconomic developments, to the rest of the world, but particularly to Europe and the United States. Here in India, I lead the Asia Society Policy Institute in India, and our mandate here is to work with our policymakers here in India for India's role in Asia and the world. So maybe I'll stop there.
No, that's an excellent background. You, of course, have also studied at Harvard Kennedy School. And so, tell us about your specialization, geoeconomics. There's so many terms that one comes to hear of. And of course, I can put two and two together, geoeconomics, globalization. But, tell us about it.
Geoeconomics, as the word would probably imply, seems like a mirror image of geopolitics, and it is a term that has come to define a more holistic approach to thinking about economic relations and economic diplomacy. Traditionally, economic diplomacy was thought of maybe thinking about trade. So, what is, say, India's trade with another country, maybe United States or China? Sometimes there used to be discussions around India's maybe relationship with, say, multilateral institutions, say, like with the World Bank or with the WTO. But geoeconomics is not just about trade and maybe finance. It includes international trades, international finance, but also international business and international economics. So it is a comprehensive term that we use to study a country's relationship in a broader spectrum. So, for instance, if I think about India's geoeconomic imperatives, I would obviously think of trade, but then I would also think about what is happening, say, with foreign investment, or what is our relationship with the IMF, or what are our priorities or positions at the WTO. So that's what geoeconomics is, and that's the subject that I take interest in and I have some expertise.
So, how do you view the political, the geoeconomics, the financial architecture of the world around us? I mean, if you really look at it, if we look at the 60s, the 70s, it was pretty defined. You had two major superpowers. You had the USSR, you had the United States. Over the years, things have become very fluid, especially in the last 6 years after COVID. I mean, if I can use that as kind of the breaking point.
Yeah.
The financial world completely changed. This was the first time when economies started collapsing. The IMF had to step in. There was a pandemic. Millions of people died. Then it became even more complex, right? You had Russia invading Ukraine. Again, that whole scenario of the Cold War started. The entire financial architecture of the world, how people do business, has again changed. How do you view that?
I would actually urge you to take one step back, for India particularly. If you recall the global financial crisis of 2007, 2008, 2009,
Right.
that in our recent history, that is an important marker.
Right.
And I'll come to COVID in a minute. What has happened is, they call it global financial crisis, but actually it was a transatlantic financial crisis.
It was basically an American crisis.
It was basically American, and to some extent,
You affected a little bit, but I don't know how.
that's right. But they brought in other countries like India and China, and that was around 2010, and particularly with the emergence of the G20 and elevating G20. G20 used to be a finance ministers forum, and that has its roots to the Asian financial crisis of 97, 98. But that's going too far back, perhaps. But if you take 2007, 2008 as a marker where India and Brazil were brought in, and the G20 was elevated to the prime minister or the leaders level, that's when we started seeing the other emerging countries like China, India, say Mexico, Brazil, take a more intentional approach towards global governance, global economy. What is our stake? How does few issues in Europe and the US affect us? So there was a decade between 2010 to 2020 or so, until your marker of COVID, where there was an attempt to take more of a role, attempt by India and other countries, in defining global economy and particularly rules and regulations. Then after COVID, actually a little bit preceding COVID when Trump came in, but around that time, globalization itself started to change. You would notice that we started to have terms like friendshoring and nearshoring and allies and supply chain resilience. All these terms
And that was
to come up.
pretty much the first time that someone confronted China the way the US did because of Mr. Trump, right?
Exactly.
That also started changing the economic because he put sanctions against China. Of course, Donald Trump also put some, extra duties against Indian goods as well at that point.
That's right. In fact, in 2016, when in Trump 1.2, when he came to power and when he actually imposed these tariffs, it was such a shocker to the world. And then in COVID, we realized, all the countries realized the dependency we have on China.
Right. The entire supply chain was from
Yeah.
China.
So I think it was only reconfirmed some of our worst fears that we needed a different strategy and we can't have all our eggs in one basket. We needed to have supply chains in which we're a little bit more independent. And so, coming to your question where you started with, after COVID, a lot more attention has gone into how do we become more resilient, maybe diversify, have some alternative plans, not only be dependent on one country for our critical minerals or raw materials. And so, a different phase of globalization and geoeconomics has started post COVID. Now, there are two or three characteristics with which you can define this new phase. One is maintaining some kind of supply chain independence and resiliency. Second is to pay more attention to who our friends and allies are and making sure we do more business with our friends and allies. And three, also introducing technology into geoeconomics, because more and more geoeconomics is now dependent on scientific and technological innovation. So how do we maintain that kind of economic security? So there's definitely a change after COVID, and India is taking steps to navigate that.
So, coming to the topic of India, how do you understand India going forward in terms of what are the interests that India is looking at when it goes to XYZ country, whether it makes investments? We made substantial investments in ports. In Iran, we have it. We've got it in other parts. We've got airports. So, what are the priorities that you see India is focusing on?
You're spot on, actually, Arjun. So one of the things I think which is less discussed or not completely understood is how internationalized India has become, right? So if you look at, say, our footprint around the world, like our energy companies alone, have over 30 energy assets around the world, equity stakes, partial equity stakes, wholly owned subsidiaries that get us oil and gas. So that's, of course, energy, because we're an energy dependent country and we import a lot of our energy. But then, of course, over time, some of our businesses have also stepped out, take contracts in developing ports. Haifa is an example, Colombo Port in Sri Lanka is an example. Some of our airport companies have actually gone and taken on contracts to develop airports in Indonesia, Philippines. And then this not even counting all the service industry,
Right.
the Tata Consulting services, you have Wipro, everybody else, Infosys, that is in different parts of the world, which have set up shop and are servicing the big multinationals. So we are quite internationalized. If you look at the net international investment position, we have about $1 trillion invested abroad. Now, $650 billion of that is foreign exchange reserves. But the rest of it, about $350 billion, is a substantial amount. That's more than the GDP of Egypt or Poland or Finland, by the way. So we have a lot of interest abroad. So that automatically indicates that we have a vested interest in understanding what is happening in the rest of the world, whether our assets are safe and whether we will be able to conduct business, and whether we can bring that technology, know-how, and the investment and capital to us so we can grow internally.
So then let's talk about supply chains. You touched upon that. This entire topic comes under technology diplomacy. Minister for External Affairs is signing so many different agreements with Japan, with different, even the Middle East. What are we trying to do there?
See, that science and technology has become a very important part of our India's economic development, or any other country, is, I think, an established fact now. And that is our future. That it is becoming an important part of diplomacy is also visible. In fact, it is imperative, and diplomacy is only reacting to the reality on the ground that we need agreements and certain partnerships with other countries around the world for our own technological progress. And we have things in India to offer to the rest of the world too. So it's a symbiotic relationship. We did a little study internally, and just from 2020, you use the marker of COVID. If we look at 2020 onwards to 2024, and if you just look at some of the Asian countries, Indo-Pacific as we call it, the number of technology-related legislations that individual countries have ratified, Japan, Korea, Australia, Taiwan, India, just in this region, and the United States, It's over 100. That's 100 domestic legislations that have been introduced on different aspects of technology, AI regulation, things to do with semiconductor electronics, and whatnot. A second data point is, as a result of this, if you look at the number of technology partnerships and agreements we have, say, just take with the United States, there are more than 25 agreements between the United States and all these Asian
So let me
countries.
put this in context. Um, the rate at which we are coming into agreements with various countries, you talked about the US 25 agreements in the last few years. Is it a counter to China? Because a lot of this technology did not really come into India before.
Countering China is one of the main drivers, but there are natural drivers of it as well, because we do need to secure partnerships on technology with more technologically advanced countries. Even today, for India, the United States, Japan, Germany, South Korea, these are the countries with which we have the most sophisticated technology partnerships. I'm not even counting defense, because then, of course, you would bring in Russia, you might bring in Israel, but just on the civil technology partnerships, we have deeper, partnerships. So it is natural that we, in our diplomacy, that some of the agreements that we do are now focused on technology. So, for instance, one example is that India, United States have something called the Initiative on Critical and Emerging Technologies, ICET. But a new one is India, US, South Korea trilateral dialogue on technology. You see, so there are different formulations and agreements that are coming to bear, because that's the necessity, and we have to initiate partnerships with other countries, not just on IT. I know when we talk about technologies, typically we only talk about, say, digital and IT and cyber, but remember, we have electronics, you have semiconductors, you have biotechnology, you have pharmaceuticals, we have advanced materials. So it's a full spectrum, and I think we're just starting to see how we can partner with other countries.
So, Akshay, when one looks at India's international economic policies, what are some of the game changing policies that we have introduced, say, in the last 4 5 years?
Look, domestically, I think it's a no brainer. The production linked incentive scheme has been our mainstay, and it was introduced by this government to create uh, some confidence in our manufacturing. And you will see over time that over 10, 15 sectors have been supported, and more money is being pulled in. Sectors specific to, say, solar, or in some cases, some pharmaceuticals, and
Telecom is one.
telecom, in which electronics is one in which we've actually put in more money, and it is reaping benefits. Results, I think we have to be a little patient to see how the results will be, because it takes time for these units to actually be established, and for the
They're trying to create an entire ecosystem for manufacturing and industry, right?
that's right. And I
At
think,
a super scale.
and the idea is that, it'll also attract other companies from around the world to set up bases here, not just in manufacturing. One of the things in India we have to attract is companies to set up their subsidiaries or even their headquarters here. You know, right now, most of the multinationals in the world, their headquarters are all in Europe or in the United States. I think this is a point which we often miss. But here, we would be able to attract these multinationals. So I think the production linked incentive is definitely one that we should be proud of, and we have to wait and watch what the results that come in. And I think the second is just maintaining our macroeconomic stability and our political stability, but a macroeconomic stability in light of what is going on in our neighborhood and around the world. It's not just Ukraine and West Asia, but you've seen some instability in South Korea. Japan, you've seen some change in government where there is a prime minister leading a minority government. We have Taiwan Straits, which is a geopolitical hotspot. And just 2 days ago, there was a news story that China is sending its largest military force in the region. So, in light of what is going on in the world, to maintain this kind of macroeconomic stability and confidence in our economy, in the future prospects, is really, really important. I really think that we need to give that full marks.
In terms of geoeconomics as well as geopolitics, let's just discuss briefly India's arms manufacturing. We've been completely dependent on, whether it's Russia, whether it is other, for our more sophisticated arms. seeing increasingly that we are going out there and now manufacturing and selling our weapons. Do you think it's having some sort of an impact on the world trade in armaments, and can India be a major player in this?
I think the only statistic that I am monitoring and that is of interest to me is the exports. And I think we've done between 13 and $15 billion worth of exports.
That's pretty substantial.
That's a substantial investment. That's a substantial amount.
Right.
And I think
And this period is over?
1 year, right? Yes. I think it's important for us to watch this space. Of course, our imports are still much, much higher than what our exports are. But development of competence in defense is not only for defense purposes. As you know, a lot of the technological advancements actually then have civilian uses,
Right.
for instance, in drones and other scientific capability. So,
There we saw that with the internet and the US Department.
in the United States, the DARPA, the Defense Advanced Research Agency, is the one that actually led all those developments and it came into the civilian
Right.
space. So I think it's certainly an area to watch out for.
So in many ways, the future for India is, technology is going to be technology driven. So all these partnerships tie into that. But let me come to our neighborhood, right? Because that's another area that you look at. We are surrounded by countries who are facing very difficult time politically and economically. How does India really balance that in geoeconomic terms? Because that affects us also, doesn't it?
We have a very fragile neighborhood. And I think most of the geopolitical developments that are taking place, one is already aware. Even this year, we had elections in Sri Lanka and the government has switched. We had elections in Maldives, government has switched. Nepal, we see quite a lot of transition. Bangladesh, of course,
Yes.
is probably the black swan. But geoeconomically speaking, when the Sri Lanka's economic crisis has been the severest crisis that Sri Lanka has faced in its own history, and India provided $4 billion worth of support. It's a combination of things. So we had lines of credit, we had to actually give some grants, we had to do currency
We gave
swaps,
food grants as well.
and also for oil so that the country could function. And yes, the IMF loan did come later. In fact, the IMF agreements are really taking off now.
Right.
IMF have something called the Extended Fund Facility, so that money is now coming into Sri Lanka. Sri Lanka has picked up. So at its worst, Sri Lanka's inflation rate was about 40 or 50%. Today it is about, I think it's 2% or 3%. There's been a gradual improvement over time. Pakistan is more of a black box. We know that it is also in an IMF arrangement, and we don't have much clarity on what the Chinese loans.
Yeah, they're heavily leveraged. I mean, one can say that.
So that's another black box, but it is clear that there is a lot of debt that they owe China.
There's food inflation, which is very worrying again for the entire region.
And security situation is no better.
Of course.
And so similarly now with Bangladesh, I think the numbers have yet to come out. I think the data to me at least, is not very clear. But I think it's suffice to say that they will need some support. And its economy, its textile industry, which was at one point even considered to be beating India.
Right. So I was actually talking to this friend of mine who's into textile exports, and he was saying that even he's been surprised about how many supply chain, different people who were actually dependent on Bangladesh have now switched over and come to India. I was asking him for numbers. He didn't have those, but he says, even if you look at my company, our exports have gone up by 65-70%. I'm not saying that's factual or, it's more hearsay, it's more of a conversation, but it does give you a kind of idea about the impact political instability has on a country.
Absolutely. And we should also keep in mind our extended neighborhood. So, for instance, Afghanistan, another difficult place. And then we have Iran on this side, Myanmar on our Southeast Asian border. So I think
There's this, it seems like this amazing oasis of peace of, I mean, touch wood, touch wood, where, we seem to be doing a lot of things right, whether it is our, the balancing between, say, Russia and the United States, how we are managing our energy needs. So we seem to be doing a lot of things correctly.
absolutely, actually, Arjun, our macroeconomics numbers are very strong. $650 billion of foreign exchange reserves today is only behind like China and Japan, and more than Saudi Arabia and say Russia, which are oil exporting countries. Our financial market, the stock market today, is number 4 in the world, only behind United States, China, and Japan, but even bigger than France or Germany or even London. Right? You typically associate, you would think that that's the greatest market. And London has other qualities because it does commodity and currencies, etc. But being the 4th largest with 6,000 companies listed on the exchanges, a market capitalization of $5 trillion, it's no easy feat. And so macroeconomically, again, current account deficit currently around 2%, not bad. We have a surplus in services. We have $80 billion, well, 60 to $80 billion of remittances coming in every year. That's sometimes 3 or 4 times the foreign direct investment.
Right.
So we have to value that much amount of remittances, what it does to our economy. So I think macroeconomically we're in a very good position. It's not happened by magic. The credit is due to all the policymakers in the country, whether it's the financial institutions in Bombay or the government in Delhi. But of course, inside within the states, we have our own challenges and our own priorities because we need economic development, a more balanced set of growth between states. That of course,
Well, that's an issue that is out there, because certain states in India, I had a lovely interview with Amitabh Kant, and he said that we need 10 Indian states to really get their act together. I mean, I'm paraphrasing him, because you can't have India reach the developed status by 2047 unless you have these engines of growth in India. And of course, we see a lot of states going out there trying to get the investments. And also for political and economic stability, we need the states to start doing well, because then the jobs will be created, right? So we have a new president of the United States coming. Well, not new per se, but of course his second term in office, he's already threatened trade tariffs. I don't think he's threatened India at present, but certainly China. He has threatened India. There you go. He's threatened India as well. He was recently talking about his opposition to a BRICS currency, right? Now, my understanding is India would never agree to a BRICS currency, especially with a partner like China. But, clarify that, give us a little bit of a background about that.
An international currency like the dollar is an international currency for a reason. There's a lot going on for the dollar. The main thing, amongst many other things, to keep it simple, is that it is backed by the United States, which itself has very deep capital markets. So to put simply, if China, India, Japan, and others are holding US dollar reserves, that means those reserves are actually being held by the United States, right? So now for a country like United States to hold maybe $3 or $5 trillion worth of reserves for everybody else, that means their economy has to be that big
Right.
to hold everybody's reserves, and they are that big, right? So that's why you need a really big, massive economy like the United States to have a currency like the dollar. That's the reason why dollar is still the international currency in all both in all 3 ways: as a unit of account, as a medium of payment, and as a store of value. So all these strings, if you look at 98% of the transactions today, still has dollar on one side of that exchange.
I mean, there are certain countries where the currency is dollar. I'm not talking about the United States. I mean, you have Ecuador and you have a couple of other
That's right.
African countries as well.
Other countries pegged to it. So dollar's role remains. Of course, the main challenger to that seems to be renminbi, which the Chinese are promoting. The Chinese have not internationalized their currencies so that it can become or replace the dollar. And the journey is a long journey for the Chinese. But they are doing experiments around the world,
Right.
which for them as well as for the other countries in the world is very important to monitor. So, for instance, they are enabling many of their trading partners to pay them in renminbi. So, what that does is it gets more and more renminbi in circulation. Other countries and central banks around the world become familiar by using renminbi and how to transact in renminbi. So that's one thing. So if you look at Saudi Arabia has done a deal with China, Russia has done a deal with China to pay in renminbi. So there are these different agreements that are coming. In fact, one of the developments that struck me was that when Argentina was in trouble, uh, IMF allowed Argentina to pay back in renminbi because it had that much renminbi in store. So this is only to say that, of course, China is trying and there are different experiments taking place. It's not there yet. For India, our rupee is not so internationalized. I don't think we want to get there that fast either because it has a lot of macroeconomic consequences. But for us, what is important is that I think our government has also made clear, and I think most of the people also understand, we're not partnering for a BRICS currency. That's a pipe dream. It's a really long shot. But we do want some kind of local currency settlement because that helps us diversify in case of a geopolitical uh, problem or an issue or a conundrum, and we're not able to pay our trading partners, say in dollar, then we're able to make those payments in local currency.
So, in terms of financial architecture, clarify this for me. When an international payment has to be routed, suppose India has to pay, let's say, an African country. Let's say it has to pay South Africa, and it's a dollar transaction that we have to pay in. I mean, we pay. So it's routed. Is it routed through New York? Because that's what everybody says, that every international large transaction has to go through the United States.
It is true. If you're using the dollar, then the U.S. Treasury if the U.S. Fed Reserve is the institution through which the transaction will be routed, or that they will be in the know, or they will approve it, and it cannot be done without their knowledge. Even if two countries hold dollars, but when you exchange dollars, there is a way in which the United States will always be in the know when their currency is being used. So, but which is why the Chinese all the more try to ink deals so that they can ink deals in renminbi and say renminbi, and
So they can totally circumvent.
they can circumvent that particular thing. And once you learn how to circumvent it, of course, for the Chinese or the Russians, they also want to ensure that when they are sanctioned, they can easily continue to do business.
Right. So sanctions is a major
Sanctions is a major-
major concern of a lot of countries. Let's talk about India's relationship with China. The border tension with China has eased. I wouldn't say it's over by any yardstick, but it's certainly eased. The kind of palpable tension that we had till even 4 or 5 weeks back, we don't have anymore. We're talking about normalization of certain parts of whether it's people-to-people contact, whether it's the airlines flying in. How do you see that?
So I can speak to a geoeconomic perspective because geopolitically, I think we have a broad understanding.
Geopolitics pretty much defines geoeconomics, especially with China.
It does.
But at the same time, it's kind of funny that even though our relationship with China went downhill, our trade with them actually skyrocketed in the last 2 years.
I think some of it is just a matter of dependency. Some of it is just market economics. Why would I think Indian government can make an assertive stand on our security issues, but they also have to be somewhat cognizant of the local businesses and Indian industry and what they are doing, and whether they can easily replace China as a source. So
It's not only a source, it's also the price points, right?
price points, scale, volume, and just sometimes certain natural resources which are only available there.
Right.
So there is a determined effort to move the supply chains, or at least having a China plus one strategy. I know so far Vietnam and other countries have benefited, but I think some of it is coming to us as well. I do think that economic security will continue to remain a concern. So with China, we TikTok is still banned here, and regarding all the technically sophisticated and sensitive areas, I think we will still it'll still require some screening whether we can really take their equipment and include it in our telecommunication network or within our cyber networks. I think that's going to remain a continuing priority for the Indian government. But otherwise, we have been trying to get some know-how from China. I mean, China has also upgraded their own skill set. So let's see.
It's a pretty complex
Yeah.
situation as far as, I guess, India, China, US as well. Before we conclude this very fascinating talk, let's talk a little bit about the United States.
I was hoping you would.
Yeah, so India has a fantastic relationship with the United States. I mean, the context is, of course, people to people contact. But there was always this hesitancy, politically for decades, which I think now we've broken in terms of especially buying arms from the United States. We're buying a lot of our arms from there. India has a trade surplus with the United States. You'd said somewhere that it's the only country in the top 10 trading partners that India has. So, talk a little bit about that, and what are the concerns that, India might have?
Look, we have to understand United States as a full spectrum geoeconomic relationship. 10% of our total trade is with the United States, right? 10% of the total foreign direct investment that has come into this country has been from the United States. And I'm just counting United States. I'm not even including the investment that may be routed through Singapore or through the other countries. Nearly 30%, close to, I think it's more, 30 to 40% of the assets under custody in our financial markets are from American companies. This is just pure financial numbers. This does not even include all the informal partnerships, the technological partnerships, the know-how that we gain. So United States is a very important partner, and the data point that you were mentioning, it is the only country with which we have had a surplus in our top 10 amongst the top 10 countries that we trade with. It's a $30 trillion economy, and it'll be in our benefit if we can find a way to get both capital and technology. We are in a stage of our development where we need capital and technology no matter where it comes from. Of course, being cognizant of some of the security issues and geopolitical developments, but certainly we need that.
And the number one place for capital in the world is the United States, right?
For now, yes.
For now. All right. Would you like to, talk about something else? Or I think it's been pretty comprehensive. Thanks, Akshay, for joining me. It's been a real pleasure. Akshay Mathur, and we've talked about geoeconomics. I hope you are now familiar with the term of geoeconomics. And we'll come back again with another interesting interview where we really try and explain the contexts, the geopolitical positions, how the world works around us. Thanks for joining me on Arjun Bhagat Decodes, and I'll see you soon with another interview.